Why Mitsubishi, a Japanese auto giant, suddenly decided to shift gears. From steep European sales surges to retreating from key markets, Mitsubishi's story is anything but predictable. With a sharp 528.9% sales jump in Europe and new alliances shaping its comeback, the automaker faces big challenges, from Trump's 25% tariffs to shifting global demand. This is not just a comeback, it is a calculated power shift. What's really behind these moves? How will Mitsubishi navigate trade battles, evolving markets, and electrification? We are unpacking all that and more, from tariffs to the future of Mitsubishi's trading power. Stick around! Hit the like and subscribe button for updates, and let's get into the details. Mitsubishi is plotting a strategic return to Europe, and it's doing so with a twist. It's borrowing from Renault's playbook. After years of dwindling market share, Mitsubishi is now leaning heavily on badge engineering Renault vehicles to re-establish its European presence. The fresh lineup includes the Mitsubishi Colt, essentially a rebadged Renault Clio, and the ASX, which mirrors the Renault Captur. These are not half-hearted efforts. They are key players in Europe's ultra-competitive compact and crossover segments. Why Renault? It's a clever alliance move. Renault's deep market penetration in Europe gives Mitsubishi ready-made access to compliant platforms, established production facilities, and local customer preferences. For Mitsubishi, this route skips the long and costly process of re-entering with fully original models. It's a calculated comeback using familiar faces under a new badge. The approach signals Mitsubishi's willingness to adapt rather than retreat. While some purists scoff at badge engineering, Mitsubishi is prioritizing survival and scalability over ego. If the plan sticks, it could lift the brand's visibility in European showrooms again, especially with EV and hybrid variants likely joining the lineup. But before this comeback, Mitsubishi had actually left several major European markets. Let's rewind to understand why. In 2020, Mitsubishi dropped a bombshell. It was halting new car introductions in the UK and much of mainland Europe. The decision stunned many but followed years of decline. At the time, Mitsubishi was in the red, struggling with profitability across the region. Sales had plunged to just 56,000 units by 2022, down from over 200,000 at the turn of the millennium. The brand was stretched thin, offering a broad lineup without the scale or localization needed to stay competitive. The UK, once a key European market, was among the first to go. The decision followed a restructuring move as part of the small but beautiful strategy, aimed at focusing resources where returns were strongest, mainly Southeast Asia. With stricter CO2 regulations and rapid electrification demands in Europe, the investment needed to stay compliant simply didn't add up. This wasn't a quiet withdrawal either. It shook dealers who scrambled to offload stock and disappointed loyal customers, particularly fans of the rugged Outlander and the L200 pickup. But the retreat was pragmatic. Mitsubishi needed to stop the financial bleeding and regroup. Still, Europe wasn't abandoned entirely, and now the brand is making selective moves to claw back relevance. Mitsubishi's story in Europe is one of long-term decline, with occasional sparks of promise. After reaching over 200,000 units in sales back in 1999, the automaker saw its fortunes wane steadily. By 2013, annual sales had plummeted to 82,000. A short-lived rebound in 2015 lifted figures to 133,000, but the momentum didn't last. Emissions rules tightened, local tastes shifted, and Mitsubishi's lineup began to look outdated and misaligned. One bright spot was the plug-in hybrid Outlander, which exploded in popularity in markets like the Netherlands due to tax incentives from 2013 to 2015. But when those incentives dried up, so did the demand. Mitsubishi failed to follow up with equally compelling electrified options, and by 2022, it had slipped even more in the region. Today, there's hope in a hybrid-powered future. Statista projects Mitsubishi's European sales could climb back to 105,300 units by 2029, generating $3 billion in revenue and approaching 3% market share. The key will be hybrid and EV models, especially those developed through its Renault-Nissan alliance. With emission regulations only getting tighter, Mitsubishi's ability to electrify fast may be the deciding factor. And while Europe fluctuates, Mitsubishi's global performance tells a more complicated story. Globally, Mitsubishi's sales performance is like a patchwork quilt, thriving in some areas, struggling in others. In 2024, the brand delivered its best numbers since 2019, with global sales up 25.8% to 109,843 units. A particularly strong Q4 helped drive that momentum, rising 38.4% year over year. It wasn't just North America doing the heavy lifting, though it played a key role with the staggering 115.9% jump in Q4 to 12,631 units. Asia also chipped in, growing 26.3% during the same period, while even Europe, despite past setbacks, saw a shock 528.9% Q4 spike to 2,486 units, albeit from a low base. These numbers suggest the brand's new playbook, leaner lineups, regional focus, and strategic alliances, is beginning to pay off. But the comeback has not been universal. China is a glaring hole in Mitsubishi's footprint, with operations entirely suspended due to dwindling market share and fierce local competition. Back in 2020, the company also suffered a 40.1% drop in global production, revealing how quickly things can swing. Still, one market stands out for consistent growth: the Philippines. Mitsubishi sold 78,000 vehicles there in 2023, overtaking even Indonesia. Yet all this progress was suddenly threatened by one major political move: the Trump tariffs. President Trump's decision to slap a 25% tariff on imported cars from Japan in April 2025 sent shockwaves across the automotive world. The tariff, justified under national security grounds, halted Japanese auto deliveries to U.S. ports overnight. While shipments have since resumed, the policy created chaos for automakers like Mitsubishi, forcing them to raise prices by an average of 2.1% to offset the hit. Mitsubishi isn't the only one feeling the heat. German and European officials exploded in protest. The German Automotive Association called it a disastrous signal, while Economy Minister Robert Habeck urged immediate EU countermeasures. No surprise, German automakers employ 140,000 workers in the US, and 50% of their American-made vehicles are exported. The domino effect is real. Markets reacted fast. Porsche's stock sank 5.4%, Mercedes-Benz 4.8%, Ferrari 4.7%, and BMW 3.7%. Even American companies took damage. General Motors dropped 7%, Ford 3.7%, Tesla 1.7%. An ACEA report estimated the tariffs could spike U.S. vehicle prices by $5,000 to $15,000. Meanwhile, Japan's Trade Minister Ryosei Akazawa remains locked in stalled talks with U.S. officials, and the July 9th reciprocal tariff deadline looms. But behind all this drama, Mitsubishi's business empire has another layer of resilience worth exploring. Beyond cars, Mitsubishi's corporate strength rests on a massive industrial and financial empire. Take Mitsubishi Chemical Holdings. Its monthly trading volume is a whopping $240 billion. That's no typo, with 720,000 traders and 100,000 active clients. This group is a financial juggernaut. Mitsubishi Electric, another key arm, is also turning heads with a bullish technical rating that signals solid investor confidence. Meanwhile, Mitsubishi Logistics is catching attention on finance charts, reflecting investor curiosity in the group's broader capabilities amid global supply chain uncertainty. This diversified presence gives Mitsubishi resilience. When one sector suffers, others can prop up the balance sheet. In times of tariff wars, regulatory changes, or shifting auto trends, this matters. For Mitsubishi Motors, the path forward is tricky but full of potential. A new battery electric vehicle is on the way, co-developed with Nissan. A comeback in Europe is underway. Growth in Southeast Asia and the US continues, and global production is finally recovering from pandemic-era lows. In the end, let's take an overview of the details from today's video. Mitsubishi exited Europe, slashed its lineup, then doubled down on a hybrid comeback using Renault-built models. Sales collapsed, then surged, especially in Asia and North America. Meanwhile, Trump's 25% tariff shook markets, while Europe fired back with warnings of economic fallout. And Mitsubishi's reach? It extends far beyond cars, with a huge monthly trading volume under its belt. So how will this comeback reshape Mitsubishi's global future? And is Europe still a viable battleground for Mitsubishi? Comment below. Hit the like and subscribe for more updates. See you in the next video.